Hello everyone, it's me, Jimmy, and welcome back to the Satoshi Chase, the crypto series where my portfolio might not move, but my stress levels do. The market today down about 0.5%, which is crypto speak for barely anything, but Twitter still panicked. No trades on my end, but we might change that, and that doesn't mean we're skipping the episode. Today I'm doing something truly wild, sharing actual knowledge. We're diving into the Martingale Strategy, a method that's equally parts mathematical genius and financial self-sabotage. So buckle up. Let's first check the charts. Yeah, we can see that the market is going slightly down, but it's mostly stable, not much movement since yesterday. We can see those two candles. Let's make them even closer. Yep, almost no movement since yesterday. We are on the daily graphic chart. Moving to the hourly, not much movement. We don't know in which direction the market will go. Our positions will remain as is. The only thing we are going to do right now is buy the lowest possible amount of Solana. Looks like we missed one moment over here, and over here we should have bought some around here, but who cares? We're going to buy now the minimum quantity available. Market buy order filled. Solana, we have $2.27 in. Perfectly fine. Margin ratio, account equity, $101, still profitable. Position value, $54.88, which is okay. We have quite a few dollars to spare. Actual leverage, 0.54, which is perfect. I mean, at this point we have zero risk, only the possibility for profit, but we will see how the market goes tomorrow or later today. Let's check our profit and loss details real quick to see how much money we lost yesterday. So far so good. Oh, yesterday we didn't lose any money. No, this is for today. Yesterday we lost a cent, and today 0, but it most probably will go up when the fees come. Yeah, not much to talk over here. Everything is the same, mostly the same as yesterday. Now we're going to move to the 1 second chart, which is really interesting. Or maybe 1 second is fine. And while we are looking at the 1 second graphic, I'm going to explain the Martingale Strategy, which sounds like something rich men in suits whisper about at casinos, but is also used in trading by people who think math can outpace bad luck. The idea is simple. Every time you lose a trade, you double your next position. Why? Because eventually, when you win, that one win will cover all your previous losses, plus a little profit. So let's say I start with $1. I lose, next trade, $2. Lose again, $4, then $8, then $16. Eventually, I win one trade at $16 and recover everything, like a magical reset button. Sounds brilliant until you hit 5 or 6 losses in a row. Then you realize you're broke, you still haven't won, your strategy was actually just a personality test and you failed. It only works if you have unlimited capital and if the market eventually goes your way. In other words, it works perfectly except when it doesn't. This is actually linked to our strategy over here. You can see we are buying somewhat the dip, but not actually. We are just increasing our positions value, the amount of coins we have each time the market goes down. In other words, each time we lose, we invest more. But this strategy is also calibrated to our wallet, which is not infinite, it's only $100, and we really keep the risk low. How we do this? When we see the market is going down, we are not entering with more orders, more positions. We just wait until it stabilizes. When we see the risk is too high, we just wait. But we're not taking any losses except for the fees, and this is how the Martingale strategy works for us. It's not the purest form of it, but it's a variation which in the past I found useful for myself. Of course, it's not always been roses and I don't know what else it was, but yeah, I did lose quite a few money just because of the Martingale. I had how much? Around 10 positions opened with leverage, as always. I like trading with leverage, and then the market went down. I started opening more positions, but the market didn't stop its movement down, and eventually I lost everything. But it's okay. It was a hard lesson, but it was a good lesson because now I am very careful and slightly more successful. I mean, back then I did lose everything, but today I am $6 up, which is great results if you ask me. And if you ask whoever it is, 6% profit is really good profit, even in this kind of market. And just looking at the time frame we did those $6, it's less than 2 weeks. 6% for 2 weeks is mind-blowing in the investment world, but it's okay. We're trying to double our money, or eventually 50% up for the first month. We do have time for this, and we do hope it happens. If we do actually 50% up in the first month, 50% up in the second month, and each month is 50% up, we will hit the $1 million in around 2 years. Hope so, but probably we can do it even faster if we double our money each month, which is crazy, but we're going to try it. So yeah, that's it for today. A flat market, a flat portfolio, and a very non-flat explanation of the Martingale strategy. Am I using it? Slightly. Do I feel smarter for knowing it? Not much. But hey, if you ever wanted to double your risk with mathematical confidence, now you know how. Like, comment, subscribe, or just nod silently and pretend I'm a financial educator. See you tomorrow, hopefully with actual trades and fewer ideas that could bankrupt me. Peace.